Hi, good morning, everyone. Welcome to the TradeStation Masterclass. Today, we're going to talk about strategy optimization and some of the technology around how to backtest strategies and how to test different parameter combinations. But before I get started, the usual introductions. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. It's always a pleasure to talk about TradeStation, especially these more advanced concepts that I enjoy a lot in the area of strategy, backtest, and optimization. Let's keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, and past historical performance, which is a big component of today's presentation, is no guarantee of future results. We all need to be aware of these risks. Please visit our website for additional details, www.tradestation.com/important-information. Manolo, who's my colleague, has been sharing that link here in the chat if you'd like to read more about these disclosures, right? Let's go ahead and get started. I'm going to switch over to my TradeStation platform and talk a little bit about strategy testing and optimization. And I'm going to get started with just a straightforward explanation of what strategy backtest is and all the different technology behind strategy development that everybody that's designing a strategy should be aware of. Every strategy in TradeStation, or at least the ones that are built in to TradeStation, because we do have dozens of different strategy components that you can use right out of the box. Every strategy is designed on a popular technical idea. Today, we're going to talk about MACD strategies. I'm going to go here to studies and add the study before I even add the strategy, so we get an idea of what the MACD is trying to do and what the strategy does to follow the MACD indicator. All right, so this is the usual MACD indicator. Nothing, different about it if you use it on TradeStation than what everybody knows about the MACD. The MACD is a calculated value based off two exponential moving averages. So what we call the MACD line, which in this case is that red line that goes, I know my defaults are all different. By default, the MACD doesn't have a red line like I have here. It has a red histogram, but I believe the red line is a magenta line, if I'm not mistaken. So let's go ahead and change the colors first so that I don't say the red line and you're looking at the histogram instead. So I'm going to change the MACD to that pinkish or magenta color, and the MACD average, I'll make it cyan. All right, perfect. That way, when we look at it, I can differentiate the lines by color. So now I'm talking about the magenta line. The magenta line is what we call the MACD line. And it's a difference between two exponential moving averages. If you're really familiar with the MACD, you know that those two moving averages have a length of 12 and 26. Those are default parameters. The 12 and 26, we've grown accustomed to using 12 and 26 because that's what, the MACD provides. And then the cyan line, which you also see here in the MACD, is an exponential moving average of that MACD line set to a 9 period. So there's three different exponential moving average periods that are used in this MACD calculation. The histogram that you see here, switching from red to green, is just the difference between those two lines. So whenever the magenta line, which is the MACD line, is above the cyan, we are in a positive histogram. Whenever the two lines cross, you can see that we move into a negative histogram because it's just a straight difference from one value to the next. So in a MACD idea, it is said that we are in a bullish mode when the histogram is above zero, and we are in a bearish mode if the histogram is below zero. Very simple idea, pretty straightforward. Sometimes we look at these indicators and we think they're more complex than what they are because of the way that they're plotted on the chart, but it's simple mathematical formula that gets plotted as a line on the chart. So what is the trigger here, though? Based on the MACD concept, the trigger is when the histogram moves from negative to positive or positive to negative. If we go into the positive side, we're going to take that as a bullish signal, and the strategy is designed to take a long trade when that happens. When the opposite happens, whenever we move the histogram from a positive to a negative, the strategy designed on the MACDs is programmed to generate a short entry if that happens. So let's go ahead and add the strategy component to our chart. And what we're going to talk about is how we can tweak that strategy to make it different, to make it better, to make it worse, depending on which direction we're heading. But let's go ahead and add them right here to my chart. I'm going to go to studies, add strategy, and we find the two strategies based on MACD. One designed to generate long entries and the other to generate short entries. I'm going to click OK. And that's it. The strategy goes on the chart automatically. No questions asked. It finds every single instance where the strategy would have generated a trade. You can see, let me just point out to an area. Right here, I was looking this morning at this area of the MACD for this security. By the way, I didn't mention the security because it's really not important what symbol we're looking at. We're looking at Apple on a daily time frame right here because the topic of today's conversation was more of strategy optimization and the things you can do with optimization, irrelevant of the security that you're plotting this on. But Apple in this area, you can see that this started maybe in April all the way to July. We had a back and forth between that zero line. The histogram went from negative to positive, positive to negative, negative to positive, and it was back and forth, generating signals. And that's the reason why you see the strategy pretty much getting busy, generating back-to-back signals on the strategy. So we have from long to short, short to long, long to short, short to long. So there was no clear direction as to what the strategy was doing, which is okay. As long as we understand, what's going on here. There's no perfect strategy. And sometimes we just have to adapt and tweak the strategy so that it behaves well in different market conditions. The market did not lend itself to actually have a clear direction, which the MACD is trying to find. The MACD is a trend following strategy. So there's no clear trend, then this is what happens. Now, it may seem to you like there's some trending intentions here because the market seems to be going up. But based on the parameters that the MACD was using, it triggered these back and forth between positive and negative, maybe because the corrections were a little bit more intense than anticipated. And that's why it was able to turn into the negative side of the MACD, even though we kind of, see a clear trend there. So we go back to mentioning the parameters. And I did that intentionally because it's all based on the parameters that the MACD is using. Maybe if we use a different MACD parameter, we could filter out some of those trades, and that's the whole concept here. What if we used different parameters for those exponential moving averages and get different results on the MACD? Sometimes we get married to the default parameters, and that's not necessarily the parameters that are going to work best under certain market conditions. So it's important that we think about these technical ideas of ways in which we can test our own ideas and our own parameters to see if you would get different results. So let's go ahead and talk about that a little bit. Before I do that, I want to take a look at the strategy performance report to see how it looks like before I start modifying the strategy and tweaking it. So let's go over here to the data tab and click on strategy performance report. Let me go to the performance summary. All right, let me go ahead and make this window a little bit larger. I'm going to collapse my strategy performance report because it usually, opens up in this expanded view that provides me additional calculations. And sometimes I'd like to click on collapse so that I can see more of a summary of what's going on with the strategy. So, all right, so we already said that this is a strategy backtest on Apple. We have 5 years of historical data. In those 5 years, we have 83 trades. 45% of those trades were profitable, which is not a really bad percentage for trend following strategies. Remember that in a trend following strategy, what you're trying to accomplish is to have these larger trades when you compare them to the losing trades. So even if you had like a lower percentage, like right here we have a 45%, it may imply that you're not really breaking even, or at least, one on the positive side. But if you think about it, in a trend following strategy, if the majority of the trades are losing, but they are small trades compared to maybe a 30 or 40% of winning trades, but these are larger trades, then that's okay. Because if you add losing trades plus winning trades, it could, turn out to be a profitable strategy, which is exactly what happened here. We had 45% of the trades that were profitable, but you can see that we're still on a positive net profit. If you count, the losses with the winnings, we had a gross loss of 20,000, a gross profit of 29,000, gives us a net of 9,000. Now, these are results that are being generated based on what the strategy is designed to do as default. We can see on the short side, the strategy struggled a little bit. We have a loss of $2,400 right here on the short side. So maybe in the past 5 years, it wasn't a good time to actually go short Apple, but it's okay. Those are kind of the things that we find out and we discover as we test different strategies and as we look at different strategy criteria. What we're trying to find out here is, are the parameters that we are using in the MACD, the default parameters, are those parameters the ones that would give you the best results? So let's go ahead and go here to my performance graphs. This is what my equity curve line looks like. I like to come here because it gives you a visual of where your money is going. We can see that at the very beginning of the historical back test, we are on the negative side. Struggled a little bit to break even. But then, after trade 25 or so, we kind of are going up in our equity. We had a huge drawdown right here between trade. This is trade 39 to trade 45. We gave back almost $5,000 between those trades. So we need to figure out what happened there. Are we able to tolerate that type of drawdown as we trade this strategy in real time? Because those are the type of questions that you should be asking yourself when you look at equity, an equity curve line like this, because it's not all about, the end result. It's not all about, the $9,000 profit that you saw in the strategy backtest. Is everything that happens in between. Because as a trader, that's exactly what you're going to have to live through in order to accomplish what the strategy, is telling you, or at least is trying to imply that it can get for you, So these are the type of things that could really break the strategy, or at least your attachment to the strategy, because it's going to get to a certain point that you're going to say, well, I'm not really confident, in that strategy anymore. If you were on this trade right here, number 39, and your equity line was at $4,500, and all of a sudden, by trade 45, 6 trades later, your equity is at 1,000. You're saying, well, what happened here? Maybe the strategy is not as good as I thought it was, So those are the things that we need to think about when we develop a strategy. So going back to what we were talking about, which is parameters. If I go here to the settings, it does give me a summary of the parameters of the MACD. We have a fast length and a slow length for the long entry, and where we have a fast length and the slow length for the short entry. So both sides of the strategies, they use the same calculation. I mean, they're both MACD strategies, so it's evident that they use the same calculation. And then we have a MACD length, which is set to 9. That is the average, or the 9 is the period for that blue line. It's called the signal line on the MACD. And, what we're calculating here is the difference between the two lines, which is giving you the trades of the MACD. So going back to the parameters, why are we using 12, 26, and 9? Just because they're default parameters? Would different parameters provide us different results? Let's go ahead and test that. With TradeStation, we have this utility called optimization that allows you to run a series of tests without you having to do it manually. Because I could sit here and say, well, in my test, I'm going to test 13, 27, and 10. I'm going to go wild and change the parameter by 1 on all the different inputs. That's, of course, a different set of parameter combination. Not much, different than 12, 26, and 9, but it is different. If I come here and I modify the strategy, let me do that manually one time. Let me go here to the fast length. I'm going to make it 13. The slow length, I'm going to make 27, and the MACD length 10. So I just incremented each parameter by 1. I'm going to click OK and click on close. If I go to the strategy performance report, that changes my report completely. I'm not sure if you noticed, but I believe my total number of trades was 84 before I made the changes. Now I'm 75. My net profit was higher than 9,000. Now I'm 8,000. So that very small change in the parameters, even though I'm very close to the default, does change the results of the strategy. And that's exactly what the point of this presentation is, that you can modify the parameters and maybe get better results. In this particular example, of course, we went backward and made the strategy a little bit worse, or not, because I want everybody to start thinking also about other parameters of the strategy performance report, because many times we focus on the total net profit, while we don't realize that even though we gave back a little bit of our net profit, we may have made the strategy tradable and a little bit more consistent in the way that it generates the profit. So it's not all about how much money it made historically, is the ability of the strategy to be consistent and for you to have that confidence that it's going to continue doing the same. If you have all these wild behaviors in the middle of the strategy, like we just noticed with that big drawdown, then that's something that you should pay attention to. Let's go here to the performance graph. We still have that big drawdown right there from the trade number change. Now it's from trade 35 to trade 41. So something that we need to pay attention to, but you can see the modification of the strategy. As soon as you tweak those strategy parameters, it changed everything. Now, I just picked, I just picked a parameter that was just one increment on each one of those inputs. So let's go ahead and talk about optimization. I'm going to double click on my strategy, because when it comes to parameters, you can test every single combination. Let me go back here to my long entry, and I'm going to make this again 12, 26, and 9. I'm just going to start simple and just optimize one parameter. I'm going to optimize the MACD length, and I'm going to highlight the 9. I click on optimize right here. The process asks me, okay, what are the range of values that you want to optimize? And here, notice that it auto-populates my starting point and my stopping point based on the original number. So now it's saying, okay, start at 5 and stop at 13. Of course, you can modify those if you want to, in increments of 1. So when it processes this, it's going to start at 5, and then it's going to test 6 because the increment is 1, and it's going to go 5, 6, 7, 8, 9 until it reaches 13. That's a range of parameters, and it's going to test all that because of an increment of 1. Hopefully that makes sense. And as you continue to use this more and more, then it'll make more sense. I'm going to click OK to this, and I see a preview of the range of values that are going to be tested, and I click OK. When I come back to this dialog where I have my strategies listed, if I look at the bottom, I can see the test count. The test count is 9, meaning that it has to test 9 different variations of what I specified. It still uses all the different inputs that are here, but the range that I specified for the MACD average is going to start at 5 all the way to 13. And that's the value that is going to be changing every time that it runs the test, a total of 9 times. Now I'm going to test the short entry as well. So I'm going to do double click on that short entry. I'm going to highlight the 9, click optimize. I'm not going to change the ranges here because this is just a way to show you technology wise what is available. I'm just going to click OK and OK. So now notice that the test count grew exponentially. It's not like, oh, we tested 9 tests for the long entry, 9 tests for the short entry. That is 18. No, it's it's an exponent or an exponential factor of the original parameter. So 9 times 9, 81 in this case. So multiplication factors, as you optimize additional parameters, they are going to exponentially grow. as well. So let's go ahead and leave everything the way it is. I'm going to explain, what type, method, and some of the advanced settings in just a moment. But this is going to run 81 tests. Let me click on optimize. It comes back very quickly. In fact, let me go back here to data because I think I left, yeah, it's 5 years. If you look at the top of my strategy performance report, you see the date range, August 15th, 2018 to August 15th, 2023. We can see that the total number of tests remains about the same, but notice the net profit here, it actually increased. I'm not saying that the strategy became better because it didn't. You can't really base the profitability of a strategy just by looking at net profit. Remember that one of the things that you're doing, and this is something really important, and I want to emphasize this point, is that when you optimize a strategy, you are curve fitting the strategy to historical data. It's very easy, for you to sit in front of a chart and say, well, I'm going to buy here, which is the lowest point, and I'm going to sell here, which is the highest point. That'll give me an optimal trade. Anybody can do that looking at historical data because you see, the highest and the lowest price points. And this is exactly what the strategy optimization does. It looks at all the historical data and optimizes your entries and exits, which is, we know for a fact that doesn't happen, in real time. That doesn't happen in real life. For you to hit those extreme highs and extreme lows and have a 100% optimal strategy never happens. We are subject to variability in the market. And of course, what you see in a historical backtest does not guarantee what's going to happen in the future, but at least you start having some confidence in the strategy, So I'm not saying that this is all voodoo science, I'm saying that this has to be used carefully and in a way that pretty much allows you to test a strategy in different market scenarios to see which one is the one giving you the best results. But let me go back here to my strategy because you have the ability to optimize multiple parameters at the same time. So let's go ahead and double click on the strategy. I'm going to double click on the long entry. All right. And in here, I'm gonna, you see, oh, by the way, something that I didn't mention, and I was going to the strategy performance report to highlight this, and I didn't highlight it, is the fact that when you run an optimization, it automatically finds the optimal parameter and it applies it to the chart automatically. So notice that for my long entry, it applied a MACD length of 10. And for my short entry, if we look over here in the background, my MACD length is 7. So it found that using a longer period for the long entry provided better results than using, the same parameters as it did before. Before it used 9 for both long entry and short entry, but now it uses 10 for the long entry and 7 for the short entry because it finds that those provided you a best net profit. Now, I want to make sure that I address multiple things that you need to be aware of when you optimize a strategy. So let me go over here and go and optimize multiple inputs. I'm just going to use the default ranges and increments. I'm not going to really stress about, modifying them at this point because I want you to do that on your own. It's important that we know how far, what ranges of parameters you want to test and the increment as well. Increments are important because, and I'll give you an example. Let's suppose that you are a fan of stochastic, and stochastic uses overbought and oversold levels, and overbought and oversold levels are by default set at 80 and 20. Okay, you follow me? So in a strategy, it uses those same, 80 and 20 as levels in which to trigger alerts or trigger trades. If we were testing, those levels, I wouldn't want to test an 81 versus an 80 because they're both, overbought levels. You could if you wanted to, but if I had a choice, and I wanted to test those overbought levels, maybe I would start at 75 and end at 95 in increments of 5. So it tests 75, 80, 85, 90, and 95. So that's where the increment comes in and plays an important factor in which level are you testing. What's the difference between testing an 80 level versus an 81 level? Maybe there are some parameters that in our heads work much better when they are set at a particular increment, 5-point increment, 10-point increment, whatever that increment is. So it has that increment factor in that dialog. So you can say, what is my stepping level for the incremental values? Okay, so let's go ahead and click OK. I set ranges for 2 of the parameters. And then I'm going to double click on the short entry and do the same thing for the fast length and the slow length. Notice that I just selected 4 different parameters, and take a look at the test count right here. 33,124. Now this is very much different than what we saw earlier with just 81 tests. We were just testing the MACD length, and we provided ranges for the 9. And now by selecting 4 parameters, you can see how my test count is exponentially growing. If I add another parameter here and I say, okay, give me an additional 10 tests, then this would increment close to 500,000 additional tests. So those are some of the things that you have to keep in mind when optimizing a strategy, that if you go overboard and you say, I want to optimize every single parameter in here, then just be aware that it'll take a long time. Can it be done? Of course it can. I mean, you can leave an optimization running for hours and it'll run in the background until it actually finishes and it gives you optimal parameters. I've known TradeStation users that run optimizations and let it run for days, depending on the number of test count that you have here and how powerful your computer is and how much data you're doing the back test on. All these are different components in terms of how long the optimization is going to take. Now I'm going to do 33,124 unique parameter combinations, and I'm just going to click on optimize. You're going to see that over here, it gives me a test count. You can see that this computer is rather fast. You can see how quickly it's finishing those 33,000 tests, but it does all the different parameter possible combinations that it can to find here, net profit. Net profit is the default fitness factor. You can change the fitness factor if you want. I'll show you where you can change that. All right, so the strategy came back. If I go to the data and I go strategy performance report, I can see some numbers here. Very good numbers, by the way, if I may say so. I can say my total net profit, $25,000. Number of trades, 93. We are at 43% profitability. We have our largest winning trade at $2,400 and our largest losing trade at $887. We need to find out what happened there. I need to say, I said I need to know what happened there, because it doesn't seem right that the strategy only had an 887 losing trade as the largest losing trade. But we can see the profit factors up here. So we start then drilling down on the performance of the strategy and finding out if this is something that we would want to trade or not. Now let me give you some additional information on optimization and some of the things you can change, and then we'll come back to this and show you some other things that will make your optimization a little bit more realistic. Because again, I'm going to emphasize this again. When you run optimizations, you're curve fitting the strategy to historical data. And the more you optimize, the less likely the strategy is going to do what it says it did in the past. So just use it carefully. We're going to use different things or different functionality here that will allow you to make sure that that's not the case. Let's go ahead and close the strategy performance report. And in settings, let's go here to preferences. And the preferences dialog, I'm going to go here to strategy. And here's where you choose what is it that you want the optimization to do every time it runs. Optimization report settings, keep the highest 200. So even though I ran 33,000, over 33,000, parameter combinations, the optimization report is only going to save the highest 200. I don't need to see everything. I just need to know the best 200 tests. The fitness function for now is net profit. But if you want to back test your strategy using another fitness factor, let's say that I want to do my win to loss ratio right here, win loss ratio, or you want to do, where is it? Return on account, percent, here it is, percent profitable. If you want to do a fitness factor and run your optimization looking at another parameter or another metric, you're sure welcome to do so. Okay. So let me go ahead and cancel out of this. I ran the optimization of 33,000 tests. I'm going to go to data and click on strategy optimization report. One thing that I need to point out is the optimization report is only available after running an optimization. Most of the time, this option is grayed out. So make sure that you run an optimization before you access the report. And the report looks like this. Let me go ahead and make the font bigger here. So let me go here to customize window. I'll make it a bold 12. Okay, so this is what the report looks like. I maximized it so that it looks, that covers the whole screen. And here is sorted by test number. That's the default rank. You know, you can see the little triangle is sorted by test count. And if I scroll down, let me scroll down. You can see that there's a total of 200. That's all that it gives you. You can increase that number if you want. And the row that is highlighted in gray is the one that it's picked as the best combination of parameters. Notice that the best combination is 12, 15, 15, 13. So the parameters are pretty close to each other. I find that very interesting. And that's the one that gave us the best net profit. And it was test number 1,658 out of the 33,000 that we ran, or that the computer ran, of course. But these are all sorted by the test number. So if I want to sort by another value, let me scroll all the way up here and double click on total net profit. You can see that it sorts in descending order, and I see the 25 grand right here at the very top, test 1,628. I can look at the other metrics without having to go to the strategy performance report. So from here, yes, I can do other sorting. So yeah, that trade had a 44% profitability. If I want to sort by profitability, I double click here and it's going to sort in descending order and show you that this one, a 9, 27, 14, and 13 provided the best profitable or profitability percentage, meaning that it had 40 or 53 winning trades versus losing trades. You can see the numbers here. Winning trades 44, losing trades 19. All right. 83. So this is a total number of trades 83. I'm just looking at, the numbers here for a moment because maybe there's break-even trades. We have winning trades 44, losing trades 19. That gives me 63. So I'm missing about 20 trades, which I think were trades that broke even. That's why they're not accounted here. Maybe I'm just making an assumption, but I can look at all the different other values of the report to see how the strategy behaved. Let's say, for example, this is a winning trade, average losing trade. Here's the win-loss ratio. If I double click here, notice that this one has a 2.54 win-loss ratio. This is in terms of the trades, in terms of profitability. And you can see that they're sorted in that capacity. Now, if you want to see the results on the strategy applied on any of these rows, just right click on the row and notice that you have the ability to apply test to chart. Because I mean, the one that the strategy optimization finds is based on net profit. But what if you come here and you start identifying other areas that you probably want to look at further? Maybe you want to drill down a little bit more in a particular different combination of parameters. Maybe because it has the highest win-loss ratio. Maybe because it had a higher profitability. Whatever the reason may be, the one that the strategy optimization found at first may not be the best one that you're looking for. So that's why we give you the strategy optimization report, because you can, compare that best net profit result with other metrics in the strategy performance report. So keep that in mind. Let me sort by net profit again. If you double click again, you're double clicking once, I believe it goes descending order. If you double click a second time on the header, it goes in ascending order. So just make sure that you keep on double clicking until you get the result that you're looking at. One other thing that I like to do, and this is to wrap up our presentation on optimization, is hiding, and this is important. We are hiding a certain section of data from the strategy. Why would you want to do that? You want to do that because realistically, you want the strategy to, you want to see how the strategy behaves on data that it hasn't seen and on data that it hasn't used for optimization. So what I'm going to do in this next example is I'm going to divide the historical data into two pieces, a piece that we call an in-sample piece, and another that we call out of sample. The in-sample is the data that the strategy is going to use for optimization, and it's going to find the parameters that it usually does. But on the next section, which is called the out of sample, that's when the strategy uses the parameters that it found in the in-sample, it'll apply them to the out of sample. So it won't do any further optimization, and but it'll apply those parameters to data, unseen data, as if it was trading the strategy on live data, which is pretty cool because now you have a way of comparing, okay, this is my report on data that it saw, and then this is my report on data that it hasn't seen, and compare one to the other. Is it as consistent? Is it giving me the same results that it did historically? Or at least, in the in-sample, is it consistent and giving me the same results going forward? Let me show you what I mean by that. Let's go over here to format strategies. Okay, I'm going to customize this. I'm going to select the same range of values that I did earlier. It remembers the same ranges, so you don't have to really, pay attention to them if you just want to do a quick test. But before I click on optimize, notice that I still have the 33,000 tests. I'm going to go to the advanced settings. And under advanced settings, this is where you tell the optimization process, reserve some data. You can do it in a percentage kind of way, excluding the first or the last percentage of the historical data, or you can do specific dates. I want you to reserve from January all the way until August for what we call the walk forward. This is literally a manual way of doing walk forward, where you tell the strategy, optimize the strategy using this data, but then walk forward the strategy using this other piece of data to see how it responds. I'm going to use percentages. I'm going to say the 30% of the most recent data. So the last 30% of data is going to be reserved for out of sample. This is the out of sample window. I'm going to click OK and then click on optimize. It's going to do the same optimization, but now it's only going to look at 70% of the data. 70% of the data. The other 30% is going to be reserved as out of sample. You can see that it does that very quickly still, but I want to show you how you can compare one performance with the other. All right. And Pernod, I'm just looking at your question here. Hopefully you got an answer. The strategy that I'm using is an out of the box strategy called the MACD. If I come over here to the strategy performance report, this is the performance report first. On the performance report, we still have that net profit of $25,000. But notice at the very top, we have a drop down that says all data. I can come here to the drop down and say, how did it perform in sample? In sample, we have $14,000. Okay, that's a good performance. Of course, it's less because in the in sample, we only had 67 trades. How did it perform in out of sample? We switch here to out of sample, and notice that, the net profit was 11,000. Of course, we cannot compare the 14,000 to the 11,000 because we're talking about two different time frames. One, took 70% of the time. The other took 30% of the time. So how do we know, how long or what's the difference between these two? One thing that you do is, let me show you something here. Let me go to a different graph. Let me go to the performance graph. Let's go to all data. So all data has 92 trades, and it gives you the dates in here, it gives you the dates up here. So if I go to in sample, the in sample still shows the same dates here. However, if we look at the last trade was number 67. Look at the date of the last trade, February 17th, 2022. At that point, the strategy stopped generating an equity curve line. If I go to the out of sample, this is the piece that goes up until, today's data. I mean, the last trade, of course, was generated on June 29th, but I believe that we're still open on that trade. Yeah, if we look over here, the trade was generated back in June. We are in August and the trade is still open. But you can see that this piece of the out of sample started, this is trade number 1, which was taken on March 18th. So you can see how the data is broken down in two pieces. The data that is using for optimization, and the other piece, which is the out of sample, where the strategy is applied, and you can compare the results. In this particular example, I was expecting for my out of sample to break down, and it actually didn't. I was surprised at looking at this and saying, well, what happened here? Because usually what you see most of the time is you have this wonderful historical backtest, and you do optimizations, and it's great. But as soon as you turn on the switch and say, okay, I'm going to start trading this strategy and going forward, then the strategy breaks and it doesn't do what it was supposed to do. And that's exactly the behavior I was expecting. And here, even though it is all historical data, we are reserving a piece of that data for out of sample, as if you were trading it live. And it seems like it's giving me consistent results. I still would have to look into this and find out if this is a tradable strategy, because it is in no way a complete strategy. Remember that TradeStation provides you strategy components that you can put together, but in no way, suggests that this is a complete strategy. There's different components that you have to be aware of and make sure that this is a strategy that works on other markets as well. This is just Apple. If I were to switch this symbol to, let's say, Microsoft, you can see how the results change. Again, I didn't run an optimization here, but still, it breaks down the data into different pieces. It's still, well, the thing is that it's using the parameters, still splitting up the data, using the same parameters in both sections and giving you what the performance would have been on all the data. But wanted to make sure that you guys were aware of this. We're running a little bit out of time. Another couple things that I wanted to show you, and I'm probably just talk through them a little bit so that you're aware that they exist. But let me just go ahead and set the strategy optimization one more time. Okay, so remember that you have these advanced settings that allow you to create an out of sample window. These settings that you find below are grayed out because this is genetic optimization settings. They only become available once you set your optimization method to genetic. Genetic is only meant to be used when you have millions and millions of different parameter combinations where you would want genetic methodology to be applied in order for the results to come back to you faster. In a genetic optimization, we're dealing with numbers like population size, mutation rates, where you are expecting the survival of the fittest, pretty much is what you're expecting by creating this genetic optimization. Do you have to use generic? Not necessarily, because in some cases, it may be necessary if you want the optimization to run faster. So if I were to change my method here to genetic, notice that it says number of tests approximately 10,000. It automatically switches or drops it from 33,000 down to 10,000. Now, my computer didn't take long to run to 33,000. So if I was running an optimization, I would be okay with doing an exhaustive optimization. But sometimes if that if that were higher, let me go here and maybe do something. Let's do optimize. And let's do the other one, optimize. So now notice that I added another component, and now we have 2.6 million different test combination. So using exhaustive is going to run every single one. Again, considering the time that it took to run the 33,000, I wouldn't expect this to take forever. So, but it would take a while for it to complete. If I want to do exhaustive, I'm welcome to. I mean, I can do that. But genetic allows me to come here, advanced settings. I don't really have to be a genius or a science or a statistics expert to know what values to put into the population size and mutation rate. I can just click on this suggest button, and based on my data, then it'll pick the numbers for me. And I click OK. Notice that now the total tests is approximately 534,000. So it dropped from 2.6 million down to 500,000, which is very considerably fast. And that's in the area of method, exhaustive versus genetic. The type, we have a walk forward type. This walk forward that's here, it's a different class altogether. We talk about the walk forward optimizer, which uses the walk forward type of optimization. In here, if you were to, click on walk forward, it'll ask you for a name, but this will save the results into a file that you open in the walk forward optimizer, something totally different. But if you're a fan of optimization, and by listening to this class, it triggered your interest, and you want to learn more about optimization and all the different advanced tools that are available in TradeStation in the area of optimization, that would be a class to look out for. We don't have it in the schedule yet, but we're going to get to walk forward optimizer soon. So make sure that you check the schedule for that topic. But that's it. That's our class for today. Let's go ahead and see if there are any questions right here in the chat. Thank you, Rich. Thank you for your comment and your feedback. I started the optimization here with 2.6 million tests. But notice how the estimated time to completion is about 36 minutes. That's not wild. That's not really bad. If I wanted to run an exhaustive optimization here, I would do it. I mean, I can sit here for 34 minutes, maybe look at other charts, look at other analysis, and wait for my report to run every instance of a parameter combination. But I've seen, sometimes that this calculation, the estimated time to completion, sometimes it says, 6 hours, or it could say, 2 days or 3 days. So depending on the number of parameter combinations that your optimization test has. But again, best practices, do not over optimize strategies, because the less likely they'll do what they're supposed to do. Make sure that you're comparing different historical periods and looking at the performance of those historical periods, and making sure that you have consistent results going, from period to the next. Also, make sure that it works on other symbols, because by changing the symbol, yes, we're changing the prices and the way that the market moves. But again, we have to be open to this variability in the market movements. The stocks that for which we have historical data, they have moved a certain way in history, but it doesn't mean that they'll move the same way going forward. So if we curve fit the strategy to something that happened in history, it's very likely that that strategy will break going forward. Okay, great. Yes, David, you can go to the forums. There's multiple discussions there about strategies and how to run these types of tests. On TradeStation, I suggest to you that you keep on coming to our masterclass sessions. Every session in TradeStation is recorded. So if you go to apps on the TradeStation platform and you open up VideoStation feeds from the YouTube channel, but is organized in playlists. So let me show you one tip here. If I go here to the masterclass dropdown, I'm able to go to strategy elements, and we find all the different, strategy development classes that we've done in the past. And you can click on these videos right out of VideoStation. So make sure that you come here for additional webinars. All right. Thank you guys for joining me today. Thank you for spending time on a TradeStation webinar, and I hope to see you in a future event. Have a wonderful afternoon. Great having you. Bye-bye.